Good morning, traders. Richard J doing a quick Ichimoku cloud chart market update on Tesla in view of the recent price action. Tesla sliced through the bottom in the cloud yesterday. There was encouraging signs that it was trying to rebound from the bottom in the cloud, but yesterday's price action really quite negative. The price action is back in bearish territory after a brief close above the bottom in the cloud. So the outlook is still bearish from an Ichimoku cloud chart perspective. Now, the key risk factor here is we expect this gap in price here to close this week. I think the pre-market Tesla's already at 914, but there's this 910 zone as well as this bottom end here, that low there. Now the low there's I think 931. Just check that low there. The low is 944. So if we update that figure there, 944, it will give us an idea as to how low it can go there. So that's the gap that's been closed at the moment on the daily, and that one should be 910. There we go. So we're on our way to close that gap, which would be a good thing. We don't really like price gaps in any price action situation, but we have quite a lot of volatility in Tesla at the moment. If we look at the volatility chart here, we can see on Tesla here, this is the volatility chart. It's about $74. That's a very wide range. And also now we are testing the 89-day moving average, exponential moving average, so it will be interesting to see if we're going to get a rebound from there. But I would prefer to close that gap at 910 and then the rebound from there. Musk is still selling quite a lot of shares here. I think if we check the news items here on Tesla quickly, we can see still selling, exercising options, still selling quite a lot of shares. Exercise the options and still liquidating quite a lot of shares for Tesla based on his options. So there's still an overhang in the market. So getting the timing right for a nice rebound trade is going to be quite difficult. The key thing we're looking out for today is the 89-day moving average, possible rebound from there, but be aware that we're running at $75, $74 volatility, so you can see volatility slowly creeping up. It's not as high as it was there, where it was about 111, so we are running at quite high volatility in the current environment. Now, I would prefer for that gap to close and then rebound back from that level, but we are in bearish territory on a daily Ichimoku cloud since price action is below the cloud. That is overall bearish. If we turn to the 4-hour chart, it's also somewhat bearish there because price action is below the cloud. Let's just the data refresh. There we go. And also here we can see the 4-hour chart gap as well. So if it can close that gap both on 4-hour and daily, around 910 would be good. And then we're trying to trade a relief rally or a retracement trade back up to the bottom end of the cloud. So that's this resistance zone. That's the upside reward targets, and the downside risk is obviously this 110 gap being closed, and then this level of support here. So it's very difficult to time the exact entry point because of the volatility. So it's going into what I call the nibbling range for a retracement range there. But watch out, 878 can also be a significant downside risk, 880, etc. So the 4-hour chart's bearish, daily is bearish. Now the weekly still bullish there because price action is above the cloud, but yeah, Tesla became very extended from the top in the cloud. This vertical ascent was an exhaustion rally, and there was plenty of time to get out there. There was a couple of sell signals in around that level on the 4-hour, and then it sliced through the turning line of the cloud. That was bearish there. Then tried to rebound from the front end of the cloud. That failed, and then it's testing this front end cloud chart level as well as this level here. If we put a line in there, that front cloud, that's a significant line as well. So keep that one on your charts, 891. So there's a particular strong rebound range between 910, 891, and these highs here, all those highs there, let's say 878. So that is kind of the rebound range, the potential rebound range in Tesla. That's a major support level. So we have this cluster of old highs, which is now new support zone. So if support holds at these levels and the front end of the cloud, we should see a rebound within this current price down right down to 910, 891 and 878. So it's a very wide range, but once again, it's all that we are quite aware of this volatility. The volatility in Tesla's price is running at about $74 at the moment, so that is quite wide. So be aware of that. It's going to be very difficult to time it almost perfectly. So until the overhang is out the way, there is significant downside risk in the stock. And on the weekly, there's a MACD signal here that might cross. We don't know. We'll see by the end of the week if that takes place. But from a cloud chart perspective, the other level I'm particularly interested in is this low here. Now, just looking at this standard line of the cloud, that's a key support zone. It is testing that zone. Yesterday, it did manage to rebound from that. This is a weekly chart. It did manage to rebound from that 931, but it tended to push back down late in the previous day. 931 rebound, but that yesterday did retest or dip below that 931 zone. So that is a key support zone. So we have a support range on the weekly chart between that turning line, standard line of the cloud. The green one is the turning line. The standard line of the cloud is a major support level as well. So that zone, together with the 910, this higher, that gap to be closed, and then this front cloud support 891. So it's quite a wide range, but we are trading something that's very volatile. Incidentally, if we're going to look at the beta of the stock, we can see Tesla's 5-year average monthly beta is 2. That's quite high. Beta 5 years monthly up beta is 3.8, so it's quite volatile to the upside. 3.8 times the market in terms of beta. The beta to the downside 5-year monthly is 2.2, so it's twice as volatile to the downside as the market currently. The beta 3 years weekly is a 1.87. Beta 3 years weekly to the upside 1.5, so it's 1.5 times more volatile than market basically. And the beta down years 3-year weekly is 1.6, so it's 1.6 times on average more volatile than the market to the downside. So just beware of that. We both know that it's quite a volatile stock, and we can see it in the beta as well. So just be aware of that. We'll work that into your risk management for Tesla, for example. But this is the downside risk zones, the gap to close, and then a potential rebound from the front end cloud chart level, all between 910, 891 and 878. So it's a very wide range, I'm afraid, but that's all due to the fact that we are aware of the increased volatility in Tesla, for example. The daily, once again, bearish there, but we expect that gap to close. And then on the 4 hour as well, expect that gap to close there on the 4 hours as well. So there's still some downside risk, but the plus side is the further we get away from the bottom in the cloud, that means this level, there's a mean reversion basically. We're bargaining on that. At some point it will mean revert and then rebound from this cluster of support back up to the bottom end of the cloud, that level there. So that level there will be a new resistance zone that it will have to navigate. So, and then as well as the top end of the front end of the cloud. So we know the kind of upside targets is just for Tesla to find a bottom now, and pure technically looking at this this gap to be closed, and then this cluster of support, this zone, as well as this cluster of support, gives us some idea where the potential floor might come into play on Tesla. So normally this cloud chart rebound from the standard line of weekly is normally also a nice rebound trade signal, but since we're already below that line, we're looking at the old higher, that gap to close, and then the front in the cloud rebound. So this gives a very wide range of a potential rebound between these levels, that standard line of the cloud as well as this old gap level, and then the front of the cloud 891. Incidentally, that flat line there also gives you an idea that there's a support zone there. So we're closer to support than we are to resistance, so it'll be interesting to see if we're going to get that rebound this week. Until next time, happy cloud chart trading. Bye for now.